That means there is over 50% gains potential on NEO stock, and this is something that probably shouldn't be ignored. What's the crack, everyone? Welcome back to Buy Hold Sell. I hope, of course, you are all well. Today is a quick video on NEO stock. I opened up a position this week. We're going to talk about why I did that and what is likely to come in the near future with NEO stock. But before we get into that, if you like these types of videos and if you're new to the channel, please consider hitting like or subscribe. It helps me out massively. NEO stock has a potential of 54% plus upside. Now, this is based on 9 Wall Street analyst expectations, and as if we scroll down, the highest price target is $18.70. The average is around $11.36, which is bringing us to this 54% upside. The lowest target is $8, and as we can see right now, we're at $7.41. So even based on the lowest price target, there is an upside all around. 6 buys, 3 holds, which will move us on to the next thing. NEO Inc. moves to buy. The rationale behind the upgrade. Now, this is Zach's Equity Research. Again, another analyst. Now, I'm not a big fan of analysts because, again, they obviously have their own interpretations, their own manipulations, their own agendas at play. But this is still all bullish news. They recently just had earnings that came out, and while the deliveries look to be going in the right direction, they are considerably lagging behind some of the other bigger players. NEO, a couple of years ago, were talked in the same breath as the likes of Tesla, BYD, Lucid, all these types of things. Now, it looks to be that it's maybe not delivering as well as it once was forecasted to. But this was a good earnings beat, and this actually broke us out of a falling wedge. This is really what I want to talk about in this video. This is a falling wedge, and falling wedges usually result in an upside. It's as simple as that. That's the idea behind falling wedges. You break out, you rise, and you can see here at a high level, we broke out, we rose. Down this falling wedge, we broke out, and we rose. This falling wedge, the target was here, we broke out and we rose. So again, going back to that, well, are we going to do the same thing again? Well, if you look at this one, we did sell off, making you think, oh, we're away, and then we rallied. So that is purely from a technical point of view. That is the main reason why I bought this. It did pump after earnings because the earnings was seen as quite a positive, which broke us out of this falling wedge. We've been in this wedge for a long time. This is your target, which brings us in and around a sort of 45-50%, but that is in line roughly with what the average consensus was at the start of this video on tip ranks. So if you combine everything all in as one, the indicators, the analysis, the recent earnings report, and just the general beating down of this market that we have seen on NEO, there's a lot of things that are, let's say, going in the right direction in favor. If we actually look at the weekly chart, we had these falling wedges. Initially, there's the target. We've hit that. And then on this larger falling wedge, which goes way back to January 21, which we have broken out of, you can see there is a target of around here, which from the price that we're currently at upwards is a 260% price rise. That is incredible. But for me, I think that's a very long play. As I said, this is something that's been playing out since January 21. And considering January 24 is just around the corner, it's 3 years to break out of this wedge. It could take 2 years to get to those prices. But that's the kind of thing you're looking at. Can NEO, with the recent earnings as a nice sort of update on where the company is financially, can NEO push on? I'm keen to be in this trade because of the falling wedge, testing this new software out that we have. But if we actually go to what I have on my trading course, the buy, hold, sell indicator. Now, these are all indicators that you get free included in the trading course. What you will find here is a buy symbol has come on, and when it buys, you buy. That's kind of the idea behind it. But there is other indicators that we will look at, the likes of the RSI and the MACD, which are sitting flat. They're not massively overbought or massively oversold. It's kind of on a knife edge what way it could go. We are below the 200-day moving average, which means we are in a bear market on NEO, and to get above that is really going to shift things. And if you look at it where we see it's only 20% to get above the 200-day moving average. The last time we broke out of the 200-day moving average, we did see a rally of about 50%. If I'm looking at this as a risk-reward ratio, I see a lot more reward than risk right now. I think a lot of the risk has been baked in, and I would hope, Chinese tensions aside, the likelihood of a war and a huge market crash, all of that stuff aside for now, based on the Santa rally, based on the indices, NASDAQ and the S&P, and where we kind of believe this is going, inflation's cooling off, everything coupled in, I don't see Neo as a bad buy right now. That is why I've bought. I am going to just see what this falling wedge looks like. We've been talking about it in our Discord. We're looking at Neo, and Dave posted this upgrade today, and we'll see what way it goes. We're both leveraged. I'm 2 times, he's 5 times. There's obviously more risk with these trades. Don't recommend anyone doing anything that they're not comfortable with. Do your own due diligence, of course. And if you've liked this video, please like, subscribe. If you want me to cover more Neo, we can maybe get into covering that stock properly. I'm interested to see what comments you have. Please leave them down below. And again, I will catch you in the next video. Enjoy the rest of your day. Peace.